Hello everyone. Welcome to AccuWeather Learning Hub. So, I hope you did like all our previous videos, the IPO series, the stock series, and you have subscribed our channel, the AccuWeather Learning Hub, for further such videos regarding stocks, how to buy stocks, how to interpret stock market data, which we are going to do today, and the further next coming mutual fund series. To know more about these topics, do subscribe to our channel and like all our videos. So, let's begin with today's topic, which is interpreting stock market data. So, how to interpret these data? How to decide which stock is the best for buying? How to decide whether the stock which is in sale right now is the correct one to be bought or isn't the one? So this is an ancient source. An ancient source which is mostly neglected these days, but it is the best source for interpreting stock data and knowing more about stocks, also about the correct stocks which you have to buy. So in this source you get to read a lot about opinions of various market experts, CAs, etc., and you can equally get the data, then evaluate which is the right stock that should be bought right now to let you gain maximum gains through the minimum investment. Yes, you guessed it right, it is the newspapers. So, newspapers are a very important source. They have views and opinions of big people, big CAs, big investors, the mega investors who daily buy and sell stocks worth crores and lakhs. So, you need to read their views, you need to interpret the charts, the stock indexes. I'll tell you everything about these measures, these indexes today. So, keep following. Now, we'll learn about what is the last price or the market value price. So this last price is the last price at which the stock was bought or sold. Now you know that at what price is this stock right now. Now your decision clearly depends on what is your expectation from the stock. So if you expect it to rise more and more in the coming days, you may buy the stock at this price and then you may gain from it by selling it when it gains value in the coming days or in the coming hours if you are doing day trading. So this is how you interpret the data of market value or last price from the newspapers, website, or whatever source you are using. So next thing which you should focus more upon is the dividend yield. If you are investing in long term like 1 year, 2 year, 3 years, or some of you even invest for 10 years and then make large gains, come out as big heroes. So dividend yield is quite important. Some companies are really good at giving dividends, like we saw Reliance recently made a nice profit in this quarter of the financial year, and they have decided to release out more shares and give out some money to their shareholders as dividend. So this dividend yield is quite important, and this dividend yield decides that if the company is giving 2% of its profit to the shareholders, 10% of the profit to its shareholders. Usually, latest growing companies don't give because they need more money to invest to grow. But which are the older companies? They are more accurate and more regular with the dividend yields because they are more confident about having funds and they give dividends to attract more and more investors. So this is the next important thing which you have to keep in mind while choosing your stock. And the next one is volatility associated with the stock. So what is volatility? Volatility is how frequently the stock is being bought and sold. So is there still demand of the stock in the market? Are people still willing to buy this stock of yours? If they are not, then you might not buy that stock, because if no one's buying the stock, when you wish to sell the stock, who will you sell to? You won't get any investors to sell them. Since you don't get any investors who are willing to buy your stock, you don't get money in exchange of it. So it makes the process quite difficult. The broker is trying to sell it, but there's no one to buy it, and you are losing more and more as the price is falling. So you should not buy stocks if you are a small investor with little bit of capital that has no right demand right now in the market. Big fishes, big sharks can do anything. They may buy a lot of stock, then demand is created, then they sell it. So we can't do that. We should buy only stock which have demand in the market, which keep gaining every time, or at least they are gaining right now when you are going to buy them. Okay? Now evaluating stocks. So evaluating stock is like you see graphs. Supposedly you are using any app or any broker which we say, is it Next Billion? Next Billion is nothing but your grow. So Next Billion Technologies is the right name or the company name of your broker called Grow. So be it Grow, be it CoinSwitch, be it anything, if you're using them, they have made graphs of stocks. They give you quite detailed analysis of each and every stock, what has been the rise, what has been the weekly fall. So they'll give you this, that what was the start price of the stock in this week, what was the maximum price the stock has reached in this week. So if you know the start price and the maximum price, you see the stock is gaining. You know sometimes it may gain more or it may fall down since no one is buying it. It gives you how much is it buying in, is it being bought and sold right now, how many people are buying it, how many people are selling it. And if you don't get the number, you mostly get the graphs, that there's a down arrow that these many people are selling it, then there's a red colored up arrow, or maybe the red colored down arrow and a green colored up arrow, that these many people are selling their stock of this particular company and these many are buying it. So you get to know this. Then you get to analyze the year trend. What was the financial year's opening price of the stock and what was the ending price of the stock right now, or what was the maximum price of the stock throughout the quarter, throughout the financial year. So by analyzing this graph, you know na ki till what extent is the stock increasing. Whenever the demand is on rise, you know that this stock will increase to this much. So supposedly you saw that right now a stock is worth 322 rupees and its maximum price went up to 374 this year, and you are willing to make a long time investment, which may be 1.5 year to 2 years. So you can easily sit and wait that okay, whenever this stock will increase, I'll then sell it off. So right now you can do this. You can keep the stock with you, you can buy it at 322 rupees, and since you know it has been doing this, it has risen already to till the value of 374. So supposedly you buy 10 or 20 stocks, and when in the next year, in the same year, it again rises to 374 or 380, then you sell it off and make some gain of 50-60 rupees on each of your stock, and hence gain about a good amount, a good sum. So this is how you evaluate stock. And these graphs are really important. These graphs are available on internet also, not just Grow, Upstocks, not just these sites. Money Control is a very good site for this. You get to analyze every stock, even the values it has been taking all over the period can be analyzed by you. You need to make careful analysis before buying a stock. Do keep this in mind while you're buying stocks. So I hope you did like this video. Do like and subscribe our channel. Do comment on the video if you have any doubts, and stay connected for the next video, which will be about stock price indexes, where we'll learn what are these indexes, Sensex, etc., and we'll know more about the topics. Stay connected, keep following, subscribe to our channel, the AQLL Learning Hub. Thank you.